All right, welcome here today. This is the first weekend of the first month, which is May, and as usual, every weekend I always come here to very much share my screen, share my analysis, and share my bias concerning one or two pairs that I'll be trading for the week or for the month. And I think last week I just shared my screen on the pairs I took that made me good returns on my PNL, and today is more of trying to review because the first week of the month is when we tend to see economic events like we're still having the reciprocal tariff wars, we're still having the Feds, the dispute between the Feds and the presidential villa, which is the US. The White House in Nigeria will call it presidential villa, but there is the White House. So because of these things, the market is not yet balanced, is not yet in shape. And once things like this tend to happen, once they are happening, as a good trader, as someone who is knowledgeable, who knows fundamental and also the technicals, you have to put this thing into consideration. You have to factor in the micro and the macro economic events because all these things affect the currencies you're trading. Mind you, you're trading currencies of countries, and these countries are being affected by their political movement of the country, the economic and all these economic news. There are things that also affects the currency you're trading. If interest rates is high or lower, it will affect the currency. If there is a dispute between the Fed and the White House, it will affect US dollar. If unemployment data is higher or lower, it affects. Likewise, non-farm, all those things, CPI, all those things affect USD based pairs, especially if you're trading USD currencies. And we all know they are the currencies that have the volatility, and this is mostly what traders trade in the forex market because every pair you're trading either is USD based pair or USD quote currency. So either way, you're still trading the US dollar, which is one of the liquid currencies we have in the world. And because of this, you have to factor in fundamentals. And I'm very big on fundamental. I use technical as gatekeeping. Once I've mapped out my levels on the technical, I go to the fundamental to very much see if what my fundamental is telling me is in line with my technical. That's how I trade. That's very simple. And it has made me over time, it has made me to be profitable over time in that I don't make some mistakes I used to make years ago. Now before I take any position or open any position, I have to go and see the fundamental news, not reading, like not trading fundamentals, not trading the news, like studying fundamental analysis from People's Bank of China, from Citibank, from JP Morgan Chase, from UBS, like from Fed, all these things. There is a site I go and I see analysts from different analysts, from analysts that are analyzing for Goldman Sachs, Citibank, UBS, People's Bank of China, Bank of America, EUC, European Union, all these things. They have where you can read what their analysts are saying concerning that country's economy and concerning the currency of that particular country. So once I read these things, I interpret them, and most of the time, like yesterday, I was reading something yesterday, and it was about Euro USD, and the analysts were saying based on fundamental, based on this and that, the exchange rate is likely going to be this, and it's going to drop. Now, after factoring in all those things, I checked my technical. This is where the technical come, and I found out that Euro USD has made a head and shoulder, telling me that once it breaks a particular neckline, it is likely going to crash to that point where those analysts are pointing the pair to reach, which is the exchange rate on euro against the dollar. So once you know this is where you trade profitably. This is where you know that you're trading with context. You're not just opening your system and you're trading. I don't just wake up. And again, my trading is long term, that I don't just wake up and go to my charts and trade all these things retail traders do. Like, you're trading this session, Asian session, you want to trade in New York session, you want to trade in London session. No, my strategy doesn't have to do with those things. My strategy is long term. I trade long term. I hold trades from 3 days, anything from 3 days above to a week, 2 weeks, depending on how long I see that explosion going. And that is because I'm armed with the knowledge of fundamentals. I'm more into fundamental analysis. I interpret fundamentals and I bring it together in confluence with my technicals and in confluence with my trading tools. So all these things, like I said, I have a course that very much teaches you how to plot your levels, on the technical side, and also how to interpret the fundamental. These things are very, very simple. The problem is people don't want to actually put their heads down and learn the right way. If you learn the right way, trading is actually very easy if you learn the right way. I'm not talking about scalping, looking for signals here and there. All you need to do is to have a strategy that works and fine-tune that strategy, have it, and over time there is no strategy that gives you 100%. You lose today, you make tomorrow. So that's one of the reasons why you shouldn't be jumping from strategy to strategy. You have to stick to one that have made you something over time. If you can make $1, you can make 1,000 more. That's just it. If that strategy have made $1, all you have to do is just understand the strategy, understand that this is a game, it's a 50-50 game, and what gives you the leverage is when you have the knowledge of both the fundamental, the technical, and your psychology is in shape and everything. Before you talk about capital only makes you've seen a position, now you size in. That's what capital does for you. You size in, like you see an opportunity, you size in with a good capital. But if you don't have the knowledge, you don't work on your psychology, you don't know how to fine tune your fundamental, your technicals, capital can never be a problem. You still, even if they give you 100K, you blow it up. That's why a lot of people are blowing up their profit account, because they don't have the actual knowledge of trading. So here, this is a brief intro, and again, I want to see you on the inside. Now I'm going to be sharing my screen on the pairs I am going to be trading this week. So I'll see you on the inside. Cheers. Let's go to. Alright, so welcome to my screen. I'm starting with USDCHF, and I've already mapped out this level since that's 2 weeks now. If you check my previous videos, how I mark out these levels is very much easier, and based on the fundamental tenets of the market, based on what I've interpreted during the week that was last week and this week that just ended, I came up with 3 buyers. As you can see here, I don't really want to scale them because I did this since last week, and we all know from the weekly time frame how this market broke out of this strong support. This is a resistance, and this was a support, and this is a weekly time frame. When it broke out from here, all I had to do was now to wait for a retracement. This is it's making a new lower high for it to start trading below. However, I still know that anything can happen because this is the forex market and you're trading currencies. Nothing is set on stone here. The market is dynamic. That's why you cannot stop learning. The moment you say you want to go into trading, you've told yourself that since I'm here, I can't stop learning. And again, as you can see, the market has tested back this support that was broken. Now the support is acting as a resistance. All I've done is go to the daily time frame. The daily time frame pretty much tells me that now the market is trading inside here. This is a very strong range. This is a range on a daily time frame. As you can see, it's trading in between a minor resistance and support. When it got here, it came back, tested, came back, tested again. So it will either come back and continue dancing this way until it breaks out, and it's going to do one of two things. Either it breaks above and come here to come and make a kind of double top here, or it breaks below this turning point and start trading down. And this is where I have these 3 buyers. I have 1 bullish buyers and 2 bearish buyers. This is it. Why I put this here? Initially, I put this here after interpreting some analysis that said it could break above here and still knife down to this price. That's why I have this. However, as you can see, this is a range here. In here now is a range. This is inside a range. It has been trading inside this range for how many days now? This is Wednesday, 23rd April to this is 9th May. So for over a week, it has been on this range, and this is why my pattern of trading makes you know when to enter the market and when to stay out of the market. Many looking at this, I've not traded since last week because I was waiting for a very perfect entry. That's how trading is. You have to simplify it in that it gives you the leverage to do some other things. You're doing 9 to 5 or you're a student. This is the perfect way to trade. Understanding when to enter and when not to enter. Now all I'm waiting for is just a break above or break below. Once I see a daily candle close below this range, this is where I want to start selling to at least this point, and this is 1.90 to more than, this is more than 100 pip. This is more than, yes, this is more than 200 pip if I'm not mistaken, and this is where I want to be taking my tip. On the other hand, when it gets here and I see a kind of retest, it breaks out and closes below here, this is where I want to start selling to this point. Again, I can still start buying to this point from here, because based on what I've seen from analysis from JP Morgan shares, especially, there was this analyst I read the analysis yesterday, and it was like saying the next level target after this break should be at this price. Now, mainly looking back historically, I found out that from the daily time frame, this is a double top. Once the market gets here, it could maybe break above this, break out of this resistance and start trading towards it. Maybe from here is where you want to start selling to the downside, and this is where my bias might likely come into play, which is from here. After it breaks, test here and start knifing down, I will sell to this point. However, now as you can see, I want to see what's happened from next week. Last week I made this analysis and I said, let me see what is going to happen next week, and this is the next week we're here, and yet the market still didn't give me a very good entry opportunity. All I have to do is just to leave the market. You don't need to be in front of your screen every time. You already know that your pattern of trading is long term, and if you tell people this is one of the best way to trade, they think is a waste of time. It's not actually a waste of time, because now you know that once you enter the market, you are at least you're 80% sure of being right than trading every day. All I have to do is just to wait for either a break above or break below. If I enter here, I'm 80% sure that this pair is coming here. Why? Because of this was the first turning point. So when it gets here, I want to close, at least take some partials and wait to see if it breaks below this price, or maybe start knifing up again because of this. And likewise here, if it breaks above here, I want to make sure, I'm very sure that it's coming here because of this. This was a previous turning point, and the market tends to repeat. There's what to call correction in the market phase. When something happens, it will likely want to correct before it either starts going bullish or bearish. So this is one of the two scenarios here, either bullish or bearish. And because of this, I don't trade every day. And once I enter a position, I hold it for as long as I can, and I milk anything I can milk from that position. This is very easy. If you trade this way, you find out that you're reducing your screen time, you're not stressed as a trader, your capital is preserved, especially if you're trading for people. The capital is preserved, you're using the appropriate risk to reward ratio, and your risk management is now in shape. Your psychology is now going to be shaped, because you're not seeing patterns that are not there. You're not more seeing patterns that are not there. You already know that if it breaks here, the next turning point is this. If it breaks above, the next turning point is this. All you have to do is just wait, close your PC, and go and do some other things. And this is it for USDCHF. The next pair I still have the same double bias is USDJPY. As you can see here, yeah, this is it. Just like USDCHF, this pair always makes the same move with USDCHF. And again, from the weekly time frame, as you can see, the weekly is telling me that this pair has reached this level, almost close to this support, and now it is, as you can count, lower high, lower low, lower high, lower low, lower high, lower low, equal high. This is a bearish reversal, tank, lower high. So now it has made a lower high. All I want to do is, when I go to the daily time frame and the 4-hour time frame, I want to see if the high will continue, and this is where I'm going to follow that bullish bias, or if it will start making a new low, and this is where I'm going to follow my bearish bias. And again, just like as simple as that, on the daily time frame, as you can see, this is a turning point, this is also a turning point. So now it is trapped in between this level. All I want to do is to wait for the market to break above this price. The next level I'm targeting is this on the 4-hour time frame. Now let me go to the 4-hour time frame. Now this is it. The market is now trapped in between this level. This is it. This is an equal high, but on a 4-hour time frame. Though I don't take chart patterns serious on a 4-hour time frame, I take them very serious on a daily and a weekly and a monthly. Now, all I'm waiting for, just two things. I'm waiting for two 4-hour candle close below this price, or 2 4-hour candle close above this price. Once I see that, I will know that I'm buying to this point because of this. This was a turning point, and likewise, if it breaks, I will sell to this point. This is another turning point on the 4-hour time frame. This is where I want to take out partials. And again, when the market gets here and I start seeing signs of reversal, I'm going to follow this bias. And this is 6.38 RR, which means this position is going to run for more than a week. So these positions now, this would be like 2 days, this could be like a day and a half or so, and this is where you hit the massive jackpots, like 2 weeks tradable position or a week and some days. All you have to do, if you've entered, you wait if you see if the market is going to flag, make some pullback, you enter with another lot size, with a higher lot size. You start with 0.50, you add with one lot, before you know it, you add with 1.5. This is how you go about trading. You're not stressed, you're not being in front of your screen. You already know that you've mapped out these levels, and the best thing you have to do is wait for them to get fulfilled and trade accordingly, following where the price is going, following where market is pointing at. Now I've already seen that the market has touched the support and it has bounced off. All I have to do is either go bearish or bullish, and the bullish is because I'm saying this is a turning point. The market could get here and make an equal high, just like on the daily time frame, and that equal high, I'm going to be following this to knife down. Likewise, bullish, wait for this to get broken and I buy to the upside. It's as simple as that. Another pair I want to check is GBPUSD. Same bias, and now I've seen this. So Monday, I think I will be going bullish because of it is now inside the range, trading in between this minor resistance and minor support, and I mapped out this level. This is where I want to start entering this position, because I want to catch this minor range. I want to just trade in between this range and see what happens. And it has flagged. This was Friday market close. Monday, I want to see what happens, and I'm sure by Monday, maybe before I wake up, I will see that the market has actually gotten to this point and maybe start pointing down. When it starts pointing down, this is where I want to start buying again. Likewise, if it breaks below this level, I will start selling. Why? Because on a weekly time frame, this pair has made a double top. This is a double top, and this is a neckline. Hence my bearish bias. And again, once the market breaks out of this resistance, the next level price is this, because I saw is it UBS? I saw the analysis when they were pointing at this price, and that was why I have these psychological levels I have for a reason. I don't trade out of context. I've mapped out my technicals, and now I'm trading based on the fundamental tenets of the market. So I have a neckline. Once this neckline is taken out, I go bearish, and once the market breaks out of that range and closes above it, I go bullish. These things are very simple, because once you know where to look at, and now this is it. The neckline, once it gets taken out, I go bearish to this trend line. You see, this trend line will determine if the market will start going up or down. Likewise, when it breaks out of this range, I go bullish to this price. As easy as that. Understanding market dynamics, understanding what multiple time frame is, so you can see how I'm interpreting it from the higher time frame to the lower time frame, following my fundamental bias, and also mapping out my key levels. All these things are here as gatekeeping, my technicals, but now I'm trading following what the fundamentals are saying, following the provisions of the fundamental tenets of the market. And this is very much it on this brief overview. Next week we'll continue. Maybe from next week the market must have flagged, and I will very much come here and discuss. Like I said, this is a head and shoulder inside this is daily time frame, and this is a head and shoulder. Likewise on Euro USD, this is a head and shoulder, and I'm waiting for this neckline to get taken out. I go bearish. Once it breaks out, I go bullish. As simple as that. And all these positions are what I'm going to hold for more than 3 days. And This is how you make job-breaking P&L. So I will see you on the next one. Do well to like, comment, and share. And if you want to learn how to do this, all you have to do is just give me a chat on WhatsApp, and I'll put you through. It's as simple as it. I will see you next time. Cheers. All right, thank you for sticking to the end of that brief analysis. And again, you know what to do. First, just like, comment, and subscribe to the channel. It's a new channel and it's going to grow over time. So the moment if you subscribe to me, you're going to be seeing every of my video every week whenever I come here. And it's very easy. All you have to do is to watch my analysis. Then within the week, because I analyze before I analyze before the week starts. So all you have to do, watch my analysis, look at my bias and my trade calls. Then once the week opens, you want to see if the market has flagged and you want to start trading towards that direction. So these pairs I just analyzed, USDCHF, USDJPY, Euro USD, and GBPUSD. As you can see how my analysis is, these are positively correlated pairs. USDJPY and USDCHF are positively correlated. GBPUSD and Euro USD are positively correlated, but the four are negatively correlated in that they move differently. If GBPUSD is up, USDCHF is down. So understanding these things will very much keep you from blowing accounts, making some retail trader mistakes, and over time you find it on your P&L that you're actually seeing the fruit of your labor. And again, on the fundamental side, you have to understand that these are things that moves the market. It's not just your technical. Your technical helps to position you for that trade, helps to position you for that movement. But the fundamentals are what move the market, not the technical. The technical doesn't move the market. Technical is an indicator, and those candlesticks are volume. The main things you look at is the prices. When the market gets a particular price, it does one or two things. Either it starts racing up or it starts tanking below. So if you understand how these things work, that's why my pattern of trading is not really that. I don't really focus more into candlesticks. Else I see it on the bigger time frames. If I see candlestick, let's say pin bar on a weekly time frame or a daily time frame, I take it serious. But if I see it on a 1 hour chart, I really don't take it serious, because I'm not too much into candlesticks. I'm more into fundamental chart patterns and where the market is trading. Price action, where is the market? Is it trading up or down? That's two things. Or is it just ranging or choppy? The moment you understand this, the easier your trading will be. Trading can be made easier, although the skill of trading is not easy on its own, because now you're trying to look at readings on your screen and you're trying to interpret them. The moment you get your hang of it, you find out that it's actually very easy. You start working on your psychology, because now you're sticking in your money, and human beings are emotionally attached to money. And this is one of the reasons why traders blow up. Most times you see traders, they say they have this position, and if I had left it, it would have made me something, because they are attached with money. That's money, that's human nature. So once you understand how the market moves, even if the market, let's say the candle is going, let's say the market is going against you to some extent, and you understand that after this retracement is still going higher, all you have to do is understand it, close your PC, and go do something else. All these things are very easy. And if you want to learn how I do this, you can comment just drop your comments on the section that you're interested in the course. It's very easy and cheap. I'm going to give it to you for 20k, and through the course you join my group where I analyze the market and interpret my fundamentals every weekend and hold Zoom meeting with everyone else. And again, do well to like, comment, and share, subscribe, and that's the only way you can keep seeing me on your screen every weekend. And we have come to stay. We're going nowhere. So I'll see you on the next one, which is next week. Bye and peace out.